All right, Todd, take it away. What's going on in the market?
Well, thanks, Mike. A lot to report this morning, everyone. So good morning and welcome, everyone. Today is the market stats for the week ending October 5th. And here we go. 42 days closed on market this past week, a 0.89% month supply, or not percent, but 8.9 months supply. We're sitting at about 112% absorption rate, average list price just over 637, and average sale price sitting at about 430. List price to sale price creeping up, 99.57, just a little higher than it was last week. Taking a look at active inventory, active is sitting at 85.92. And our pending is at 65.71. So that's a nice thing to see, a little growth in the active inventory and a little rescinding of the amount of people that are demanding that product. Pending is shrinking just a little. Closed days on market for the month of September, 96.71. We'll talk about that in just a bit. New listings, raise the flag. Over 2,000 listings this past week, 2093, almost 2,100. That's up just short of 10%. We're averaging about 114 days on market for active inventory. And our closed days on market was sitting pretty much the same as it was last week. Taking a look at price ranges, we're sitting at 65%, 66%. That is under 500,000. So again, continuing to shrink. That was about 67.5%, almost 68% last week. So that's continuing to be the hot spot of the market. And you can use this by price range to be able to see exactly how many units you really have in each of those price ranges. It's a little scary. Looking at 500 to a million, we're sitting at 22. There's not a lot of change right there, maybe a little more brisk on market. And our 1 million plus inventory hovering in there right at about 148 days. And again, we keep talking about, because it's very, very important right now, the California buyers are still coming over and they're still looking at properties in excess of $1 million net close. And so it's real important to understand between $1 million now, it was 1.1, 1.2. Now it's between 1 million and 1.5 million is running at about 90 days on market. So it's very brisk from that perspective. Taking a look at week over week and last year, same week. Last year, we took 2,200 listings, but it was a good year. This year, we're sitting just over 20, just under 21. That's good because, as you can see, it's up significantly over last week. Our active inventory sitting at 85.92, another green ticker. This is up. Of course, it's not the 14,000 we had last year, but it is doing exceptionally well because it's going in the right direction. New home inventory, you see a little red tick, is starting to slide, continuing to slide. It has not yet recovered as far as rebuilding the product, and that's more than likely because that's the where we're filling that vacancy in the inventory. Taking a look at pending is at 65.71. That's a good sign. Realistically, it's not. We're never encouraging people not to participate in buying and selling a home. However, from a buyer's perspective, this should be, if you look at last year, about 4,900 historically, year over year. The amount of September seems to be just around 5,000 in the industry, in the market at any one time with a pending unit. So when we're at 6,000 and above, we're 1,500, 1,000 to 1,500 more people in the marketplace actually in. That's not really a good comment. What I should say is people that are under contract in the marketplace. And so consequently, that's where the demand is really hitting our inventory at this particular moment. Looking at month supply, like we talked about, again, very, very, very small month supply. It was 1.79 last year. Our inventory price range, because this, Mike, is one of those things that when we're talking about what our agents are saying, what the consumers are saying, and we're kind of saying, hey, even smart people make bad comments about the marketplace. And in
I used never mind.
Yeah, I think you did too. But
you're going to replay this.
Yeah, we're going to replay this. So, but the fact is that if you look at average list price, the average list prices are not ridiculous. They're not out of as long as they're under 12%, we're okay. We're not in that boom market that everybody continues to think that we're in. If we take a look at the average sale prices, look at those. The prices aren't driving up too high. So again, those are staying between 8 to 12. It's a little over 12 right this particular moment. We'll see how it works out. But again, that's not dramatically bad. We're talking about, people talk about the foreclosure market. And the thing about the foreclosure market is the normal rate is about 7% default, meaning it's normal that, 7% of the people that borrow money default. And so we've been averaging like 4.5 over the last 7 years. So again, it's been so dramatic. Now that we're back to 6.5 to 7%, everybody thinks this, Chicken Little's falling out of the sky. That's not true. We're just kind of coming back, and I think it is exacerbated because of COVID. But again, that will be seen after that is over. So 99.57 is the list price to sale price retention, and this indicates exactly how much is the seller giving up on the time when they accept the contract. What was the difference between the contract price and the list price at that time? So when we get over 100, that's really when we have a problem. When you start seeing this stay over 100, and again, we've been ebb and flowing for the last 27 years that I've been tracking this. So, this is just one of those things. We're always right between 97.8, 98% typically. So again, not ridiculous, not bad, not a bad sign. Everything is good sign saying the market is still strong, market is still recovering. So looking at September, the month of September, we took a total of almost 11,000 units, 9,270 last year. So there's a win. We're up 27% over last year as far as it relates to new inventory. When we look at the active inventory, because that new inventory filters down obviously into making it available, we're sitting at 12.4, and remember, this number does include the pending units. So when you're looking to the left and you see 8,500, you look to the right and you see 12.5. I want you to know what the differences are, and it discloses it on the chart. But when we're looking at this, last year we're at 15.5, so again we're just under where we need to be, but again not far off. We're only 3,000 units away here from being at the same inventory level as last year this same time. So we can recover from this. This is possible. Looking at the pending units, we're sitting at 6,400. Last year we were at 7,600. That was a huge number at the end of the month. And again, so this is when I said earlier that we don't have quite as many people in escrow right this moment. This is really important because it's so opposite of what people are talking about in the industry right now. They're saying, "Oh my gosh, got so many people." Oh my gosh, it's not true. So when you sit down here and you look at closed inventory, we're sitting at 9,671 for the month, 8,000 last year. This is 20% higher. Remember, we've been talking each particular month. Last month was 12%. It was lower. It was 3.5%. The month before that was 12%. Month before that was 10%. We are way over 2019's numbers. So good market. Thank you, California. Thank you for all the people that are coming in. You're really helping boost and keep the economy alive. And you're buying that $1 million stuff, which really is usually pretty slow. So taking a look at the month supply, we closed out the month at 1.2 months supply. That's much shorter, but again, it's not in single digits, not bad. 77% is what we ate up for the average inventory each month, each week of the month. Taking a look at the average number, looking at the average sale prices, again sitting at 412. It was 335 last year. That's a pretty big number change. That's more like 20%. But again, we see ebbs and flows. So we're not looking at 1 month necessarily. We're looking at the whole year-to-date growth in the last 12-month period, and of course, it retards from that number. Taking a look at the median days on market, again, it's very, very brisk out there. Median day on market is about 29 right now. So when we don't normally talk median, we usually talk average. So that's at 45. And in comparison to last month, it was 49, and it was 57 a year ago. So we're 10 days faster, or probably about 10% faster right now than we were last year. And again, if you take a look at the list price to sale price retention, you see that we're not off the mark that far. We're still under 199. It's struggling, but we're not seeing the pressure on the pricing, and we're not seeing, Chicken Little falling out of the sky, and we're not seeing the fact that the prices are inflating so much that, we're in the bad market. So, Mike, I'm real interested in hearing your next segment. So please take a look and, and see us in different places. Recommend other people, recommend your clients. They can go to a lot of these different places to hear it, but the best thing to do is to see the slides, in my personal opinion. Go to youtube.com, West USA Realty. It's a lot easier to follow along. Thanks, everybody. I really appreciate you taking the time.
I appreciate it, Todd. As always, good information, and that's going to be a good segue